Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going over our stock market weekly change for the 1st through the 5th of April 2019. I make these videos covering the four main indexes, the emerging markets, stock futures. We take a look at the entire S&P 500 movement for the week. Take a look at financials, semiconductors, home builders, oil, silver, gold, bonds, and then mortgage rates. So we do this on a weekly basis. That way we can kind of track the progression of the market along with other indexes and those commodities and materials. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I make content covering the stock market, personal finance, real estate, and entrepreneurship. And if you do enjoy the video, drop a comment and hit that thumbs up button below. I appreciate all the feedback and responses that I've been getting on the channel, and let's go ahead and get into it. So we're going to be taking a quick look at last week's changes for the week. So every week here on Facebook, I post it over on Instagram first. I check the changes for the week. So the S&P 500 gained a 1.2% increase, Dow Jones up 1.67, NASDAQ up 1.13, and then my portfolio last week was up 1%. Prior to that week, it was all in the negative. Everything was down basically for the indexes there. Everything had been negative. Currently jumping into this week, we had some very nice movement across the board. Now we are going to be covering some information that I shared earlier today on Friday about quantitative easing and how President Trump is coming out saying that the Fed needs to start it up again. And that's what really kicked it off here this week on Friday, kind of sending the market higher. So S&P 500 year to date up 15.39%. 5-day change up 2.06%. That's a crazy increase here. We are almost back at all-time highs for the year. Check that out. Dow Jones here, increase of 1.91% this week. Year to date up 13.28%. This is in last place currently. We can see here the S&P up 5.38. The NASDAQ is currently in first, up 19.64%. Semiconductors really helping this specific one out, up 2.71%, whereas all the other portions here were around 2%. Now the Russell this week, the Russell isn't really considered, one of the main ones, but it's still our national. It's used for using. So if you're tracking at the national level of how our small mid-cap companies are doing here at a national level instead of just those international and large cap stocks, then the Russell 2000 shows a good example of how we are going here nationally with our jobs, with our unemployment rate. I know unemployment dropped quite a bit. That was out on a lot of the media outlets this week. But here, for the most part, everything is looking pretty nice here. 5-day change up 2.78%. So this actually beat out the NASDAQ here by just a bit. Year to date up 17.35%, putting it in second place. S&P up in third place, and the Dow Jones is in fourth place. Emerging markets is an interesting one here. This one has been bouncing up right back up 3.45%. Year to date 13.67%. This is one that I saw investors over in my Facebook group that were buying into this one at that, I believe it was $34 at the time when they had started to buy back into the specific one about 6 months ago. I believe it was down in that $34 point around December time frame, and now this this specific has this one's gone up nearly 10% over the past 10 months. Just one of those interesting areas. I don't invest in the emerging markets. I don't invest anywhere outside of the United States. All my companies are mainly in the United States with their international, Coca-Cola, Johnson & Johnson. They have international ways of getting revenue and such, Apple, but I don't buy anything overseas. Now, currently stock futures are currently about flat. We can see S&P 500 at 0.06, NASDAQ up 0.11, and Dow Jones coming down 0.06. This could be due to some of the after hours movement here. So you can see Boeing here in the after hours change. Boeing down 2.2%. Now, Boeing actually had a bit of a comeback this week. I saw a lot of investors taking a look at Boeing here after hours on Wednesday. This one gapped up. So Boeing gapped up to almost 3%, ending up 2.89% for the day. Now, whenever you see a stock gap up, it generally recovers. It has to retest that portion of where it had to close. So here you can see that, where does it show here? This one may be coming back down to that $385 point. So here in the after hours, we can obviously see here that it fell to, where is it? Down in the after hours, 2.25, 2.2% down to 383. We may see Boeing retest that $385 point before deciding whether it needs to come back up or come back down, go down again. But normally these gaps are refilled. So taking a look here at some of the most active stocks in the after hours, we can already see here BA should be here down 2.2% in the after hours. Now what I like to look here as far as after hours stocks movement is banks in technology, semiconductor. So Bank of America, Comcast there up 0.32, AT&T basically flat. Not a whole lot kind of going on there. Microsoft 0.09. Not a whole lot of movements here in the after hours. So market pretty much closed. Here we can see the movement for Friday. It was a bit of a mixed Friday. Google, Facebook down. Financials were down here on Friday. Philip Morris down 0.73, but not any specific sector was terribly hit. If we look at the 1 week performance here, we can see here that drug manufacturers, there are a lot of red there. We have Johnson & Johnson down 2.58, Merck down 2.43, Eli Lilly down 2.13, and Bristol Myers down 2.24. So over in the healthcare sector, there was a mixture here. Pfizer and AbbVie have been getting punished year to date, but that helped them kind of stay positive this week, whereas some of these other ones that have been rallying really well throughout the year to date, they did come back a little bit. Also over here in the medical appliances here, we can see MDT, Abbott Laboratories, and so on, many in the negative. Down the utilities, as the stock market's climbing, utilities aren't, they're just kind of left there as investors are moving into these higher, higher growth sort of stocks. So Google up 2.94, Facebook, look at that Facebook recovery. Investors out there were buying Facebook by the tons back in that $130, $140 range. They have made out very nicely here, up 5.42% for the week, and you can see everything else there. Twitter 5.6, Google, we've already mentioned Google, Amazon over here 3.17. So very nice movement this week. Apple really pushing my portfolio higher here, up 3.71% this week. That's where a lot of my growth came from this week. I've also started to buy up some more JP Morgan earlier this week. So very nice there. Financials moving up higher, 3.46%. We have semiconductors, which really helped that NASDAQ here, 6.27% in the NASDAQ. Home builders also jumping up very nicely, 4.62%. You can see a lot of this movement here on Friday as far as home builders goes. And oil changes for the week. Oil jumped up very nicely. Now, if you want to pause it and read through here, I'm not going to read through here the text, but for the most part, oil was down on Wednesday and Thursday. Not too much. It recovered all of its Wednesday and Thursday losses, up nearly 2% for Friday, up ending 5.2%. Year to date, oil is up a massive 36.13%. Now, the dollar, normally when the stock market goes higher, you'll notice that the dollar does have a bit of a pullback, but here you can see that last week, I believe we closed at 96 and like 80. So here, if we take a look here as we expand this out, so on the 31st, we were at 97.25, and now we're currently at 97.36. We've put on nearly about 10 cents there, but that's still pretty nice. That's kind of interesting that the dollar, or the US dollar, yes, the dollar is actually climbing higher as the stock market also continues to climb. So I'm not sure what to think of this market. So Trump came out leaning on the Fed to cut rates and bring on quantitative easing, and that is something I want to cover here on my Facebook page. I posted earlier today. Silver and gold are down this week. 5-day change down 0.07. You can see here the gap down. Now again, when there's a huge gap down like this, when it closes high and then gaps down lower in the day, normally if you're buying it on a gap down, depending on what the news is, it generally recovers that gap. So here, silver, it sold off, opened very low, had a whole lot of volume here. You can see the volume, huge volumes here in the morning, and that basically recovered all of its loss, plus gained an additional 0.14%. Friday, it lost a little bit, but for the most part, basically ending flat for the week. Year to date, silver and Silver is down 2.41. Gold is actually positive currently year to date by 0.6, but here basically ending in flat for the week here. Again, it gapped down, ended up higher for the day. And jumping over into bonds, bonds actually down about 0.5% this week. It did go ex-dividend on the 1st, which was on Monday. So here on Monday, as that dividend is pulled out of this specific stock, you can see here, I believe bond pays out. Let's see if we can just go over to dividend.com. We can actually take a look at how much this specific fund actually pays out per share. So it pays out $2.40 each year, but if you divide 240, so bust out our handy dandy calculator, if you divide 240 by 12, that actually shows you that it pays out 20 cents per share each month, because it is a monthly paying bond fund. In here you can sort of see the growth of this one, 18, 18, 19, 19, 19, and so on. So kind of interesting. It's not consistent. Oh, it is pretty much consistent within the 18 to 19 cent every month, depending on however many you hold there. Very interesting to see that. And current mortgage rates here, we can see that mortgage rates have actually increased slightly here. When I checked this earlier, it actually looked like rates had actually came down and actually showed me a little bit better. So if we take a look, actually we just go to Google and do this. If we just kind of put this into our Google and punch this in, mortgage rates, mortgage interest rates. It normally tells us up at the top. Okay, so it's doing a terrible job of this now, but mortgage rates, I believe, up 12 basis points. So yeah, 12 basis points. So rates have started to come back up. So if you are thinking about going out there and locking at a rate, check out bankrate.com. I have been shopping for a rate. I may end up, I'm not going through my credit union this time. I went out, we had a real estate meetup this Friday. I went out, they had a title officer there to speak. So they gave me a whole lot of information about, I purchased their home back in September and October. I have my notes here. If you go to a title company and let them know that you recently purchased a home, a lot of times they'll give you a discount, a reissue discount, a reissue rate, which basically cuts down your title insurance by 25% depending on who you go through. So that was some really good news, plus a lot of whole other information I got from them. So I'm going to be definitely doing some real estate stuff here. Now jumping over into Facebook. Now I posted a lot of information this week. I'm going to zoom out a little bit here so that way we're able to see some of the changes here. So I posted a little string of information here as far as the last crashes that we've had. In 2000 we fell from a high of 1500 to below 1000. 2008 we fell from 1500 to below 1000. 2019, 2020, where do you think we will fall? If we do fall, we're trading now at that 28, almost 2900 points here. The next time we fall, do you think we'll retest that 2000 point here that was due back in 2015, or do you believe we'll retest this high of back in 2008 of that 1500? And some of the comments here, you know, 1500 is a black swan event, and I think that's a really good kind of interesting thing. So I'm not sure. Yeah, I'm not 100% sure how everything is expected to kind of play out in the future, the way that they're trying to kind of play the market here. So April 1st, I did my buys. I made a whole video covering what 5 stocks I bought, plus I added a new position. That new position was Walgreens. I added Walgreens into the portfolio. Here you can check out, oh, I'm sorry, it was not Walgreens, it was Medtronic. So Medtronic there, ticker symbol MDT, was added to the portfolio. It did come down slightly this week as we tracked here in the total changes for the week here. You can see Medtronic down 2.36%. Now I started this position, so this, by having it go down this week, that allows me to buy in next week at a much cheaper discounted price. It also showed some dividends here that were paid out for the week last week. CenturyLink and Digital Realty Trust paying out a little over $4 and some change. Actually, what, $10 almost. And kind of jumping up a little bit more information. So Monday, all indexes gapped up. So here we had a huge gain for the, initially when we take a look, I can't go back any further than this 5-day change, but we had a bit of a gap up between Friday's closing and Monday's opening. So I wondered, hey, are we going to have a bit of a gap back, to retrace back down? And I know that was covered in a couple other investor channels. Walgreens misses earnings, dropping more than 12%. This is Walgreens' biggest miss, and as far as not a discount, but its biggest loss in a single day, down 12%. If we take a look here at the Walgreens ticker symbol WBA, we can see here on Tuesday down a whopping 12.81%, continue to sell off Wednesday and Thursday, Friday up 1%. Due to this, I am probably going to be ending up buying Walgreens on Monday, just letting you know. That's one of my trades. As a quick disclaimer, I own Walgreens. Will probably be buying some more. Bitcoin to the moon. Bitcoin did nearly 100% turnaround here just within the last week. If we take a look at Bitcoin prices, I don't know if I have what's it called? I have Coinbase. I don't need to log on to that right now. If we take a look here at the prices for Bitcoin within the week here, I'm not going to worry about it. It basically essentially doubled here. You can see that Bitcoin is now trading at above $5,000, starting in that 3,000 range earlier this week here on Monday. You can see here, let's see if we can go back a week here. So 1 week, we can take a look back here. Bitcoin was nearly at that 4,000. Let's see, let's go back 1 month. Okay, so here about a month ago, we were down at that $3,000 range, or investors that were Bitcoin investors were down in this $3,000 range. What happened here on April 1st that caused this spike? I think it's interesting. I don't know what's out there that caused this spike to happen, but I know it's very interesting. I know a couple of people that are heavily invested in this, one of them being a couple of my coworkers. I always joke with them and poke stabs at them because they bought at what, $15,000 when Bitcoin was high. So when Bitcoin breaks 4,000 or 5,000, they still need another 15,000 for it to break even. So I was able to roll. I have a video coming out here of how I was able to roll less than $10 back into the market here. So I made a market buy of $2.67 back into the market. So I thought that was kind of interesting. I put out my article for March covering the dividend buys and dividend income for 2019 March. Here's my sort of screenshot of VU being rebought back up with less than $10. It was bought back up at $2.66. We have an interesting article here. This guy here is from Oregon, my state here. He's trying to come out with a tax on unrealized capital gains on stock market and on real estate. So I thought that was kind of an interesting article. I don't think anyone will fly with that, but we shall soon see how that plays out. MO came out. Well, not MO, basically all Tabasco stocks this week. If you take a look at Altria, if you take a look at Philip Morris, we kind of saw that here over here on the sides. Where'd Philip Morris go? I know it was, where were you? I remember seeing PM. Oh, here it is. So Philip Morris down 3.34 and Altria down 4.63% for the week. And that was all because of some study that came out, possibly linking seizures to vaping. The FDA came out saying, hey, if anybody is doing this and they have some sort of seizures from this, contact us, to get this sort of information better taken a look at. Elon Musk, Tesla took a huge hit this week. I wasn't tracking it after the loss here, but they lost like 7% in a single day. Yeah, 8.23% there. Look at that gap down. Now, this was because they came out with some news as far as their sales goes. They produced quite a bit, but they didn't actually make it, like selling them out the door here. So Apple rocked that Roku. So Roku got knocked out, coming out saying that Apple could be a good competitor against them. I made my video on Friday release going over my total rehab costs, my income, basically just rehab costs for 2018 on my very first real estate investment. I went over all my numbers of how I calculated my costs, what my actual costs were, what I do as far as my utilities, my expectations, and all of that information there. So I put that out there. If you guys are interested in checking it out, definitely head over to my YouTube channel and check that video out, or if you're following me here on Facebook, check out the link. I posted an updated screenshot of my Bumped app. I just got invited to this about a month or so ago. So here I own a few different stocks here between McDonald's, Lowe's, And Red Robin, I believe, is that one right here. RRGB. I'm not familiar with the ticker symbol itself. RRGB. It is Red Robin. So it is correct. Red Robin. I was able to get lows in Red Robin given to me for free just by signing up and selecting them. So I thought that was really interesting. And then here is the sort of news that came out on Friday. So back in 2011, civilian Donald Trump came out saying, "Hey, the Fed is way out of whack here. They need to stop doing their quantitative easing, flowing money, easy money into the market. It is going to destroy. It's going to create record inflation. It needs to be stopped at this point. The Fed needs to stop lowering rates. They need to stop, buying up debt and, unperforming assets." And this was back in 2011. And now in today's news, 2019, now that he's President Trump, he's calling the Fed now for qualitative easing. So there's a whole lot of articles here covering, President Trump coming out and saying, "Hey, we need to put quantitative easing back on track. We need to cut the rates. They're way too high right now," is essentially what he's saying. "We need to restore the bond buying program and use it to lower long-term interest rates." Interest rates are already low. They need to continue. We can't keep inflating the way that we've done the stock market. As investors, we all love to see green, but it's eventually going to come back and nip us for what we are sort of, pushing higher and higher. We don't need this right now. I think we should continue to raise those rates at a slow pace, making sure that we're able to climb higher. But right now, Fed coming out saying, "Hey, we're not going to be raising rates." There's like a 30% chance out there that they're actually going to be cutting rates. A lot of investors, a lot of friends that I've talked to are sort of thinking that we may be cutting rates here towards the end of the year. And I think that would be going backwards as to what we've been trying to accomplish. We've made it this far. By raising rates, we either need to continue at this rate or bump it even higher. So we shall see. Let me know in the comment section below, what do you think we should do? Do you believe that we should cut rates and put quantitative easing back into practice, where the Fed is out there cutting rates and restoring the bond buying back program in order to keep rates suppressed, continue pumping the stock market and real estate higher? Or do you believe that the market and real estate and everything is a little bit inflated and needs to be sort of popped a little bit in a slow fashion? Let me know in the comment section below. I would really like to hear your opinions on this. And that is basically all I wanted to cover in today's video. So if you guys did enjoy the video, find it helpful, hit that thumbs up, share this with your friends who are stock market real estate investors and just want to have that information every week. And if you are brand new to the channel, have not yet subscribed, I'd appreciate it if you do hit that subscribe button below. And thank you all for tuning in. I will see you next time. Have a great day. Bye.